I'm the co-chair and co-host of this year's Federal Reserve System Community Development Research Conference. You'll hear from Claudia shortly, but there are many individuals who took part in planning this effort, and it's my pleasure to welcome you on behalf of all of us. This event takes place every 2 years in partnership between the Board of Governors and one of the 12 regional reserve banks on a rotating basis. 2019 marks the 20th anniversary of the conference and the second time the Chicago Fed has hosted. Unlike the last time, which was in 2003, I'm happy to report we're about 99% digital this time. We did print the agenda with app instructions at the end in case you haven't had a chance to download that as yet. We have a broad audience here today representing academia, the financial community, including CDFIs, federal, state, and local policymakers, various nonprofit, philanthropic, advocacy, and service organizations, and of course, the bank regulatory community. Even though many types of jobs these days are more data-driven than in the past, most of you are not, from the titles you provided, engaged in empirical research as an everyday responsibility. These titles include teacher, pastor, outreach advisor, housing counseling coordinator, affordable lending manager, CRA officer, planner, and others. We're very glad you're here. While we hold the conference to present research, our MO has always been to elevate the latest work with ramifications for policy and practice, and that can inform your work in pragmatic ways. We have, as always, asked our panels to focus their presentations on the policy implications of their research, as our goal is for you to leave here tomorrow with food for thought and action. Economic security and mobility are core to the mission of the Fed system's community development function. We work to help people in places isolated from the mainstream economy by conducting our own policy-focused research, assembling diverse parties at convenings like this one and others to consider new ideas and partnerships and to even help bring them about. The theme for this year's conference, Achieving Middle-Class Status, in essence, is one that's drawn much attention from various disciplines and the media, despite the fact there isn't really a set definition of the term. Still, I think we can agree on some crucial elements that lead to a stable household and community situation and a way upward from poverty. 1, living wage employment and a clear educational path to it. 2, opportunity and resources to build wealth for goals including a secure retirement. And 3, sound, secure neighborhoods with essential amenities and access to employment centers. We chose to parse the content of the conference to align with these 3 broad themes. Before we get underway, I'd like to touch on a few highlights of the 2 days and provide an overview of the agenda. We're honored to have Fed Chairman Jerome Powell here to share some of his views on the conference themes. He'll be introduced shortly. We're also very pleased to have Charles Evans, CEO of the Chicago Fed, who will address the conference at lunchtime today, as well as Fed Governor Lael Brainerd, who will lead the agenda tomorrow with a keynote address. We have 3 very substantive and we anticipate thought-provoking plenary panels for you. They will take place in this room, and Claudia will provide an introduction to the first one following Chairman Powell's remarks. We've asked our plenary speakers to draw from their body of research to discuss the latest trends and developments across each of the 3 underlying themes of the conference. The hard part for you will be choosing between the concurrent sessions taking place in between the plenaries. We received about 140 paper submissions for the 27 spots, and I think I can say with confidence you'll find any of the breakout sessions engaging and informative. We ask your cooperation in moving between spaces and getting settled with an eye to our schedule so we keep on track. You'll have a half hour this morning to reach your breakout room, but the transition times get a little shorter from there, about 15 minutes this afternoon and tomorrow. If you need any help finding a room, please look for a person with a green ribbon on their badge that says staff, looking for a room or for anything else. And also, please do hold onto your badge for tomorrow, as I don't believe we have new ones for you. After the morning plenary session and breakout panels tomorrow, our luncheon keynote will be Juan Salgado, Chancellor of the City Colleges of Chicago and MacArthur Genius Award winner. The Chicago City College system has undergone a big transformation under his leadership, and his work for many years at Instituto del Progreso Latino, developing holistic educational approaches for ELL and immigrant populations, the work for which he received the MacArthur Award, is nothing short of inspirational. We've asked him to also reflect on the conference themes. Finally, tomorrow, Senior Associate Director of DCCA, Anna Boyd, We'll close the conference with a video mosaic of middle-class workers, the real-world challenges they face, and provide some parting thoughts. I hope you can stay with us till the very end, as you won't be disappointed, and I thank you once again for taking the time to be here. It's now my pleasure to introduce to the stage Eric Belsky, Director of Division of Consumer and Community Affairs here in the Board of Governors. Thank you.
Good morning, everyone, and thank you for joining us. It's a pleasure to be with you all this morning, and I want to add my welcome to everyone to the Biennial Community Development Research Conference of the Federal Reserve System. And I think we have in front of us a very rich and contentful conference, and that's thanks to the work of many of my colleagues across the Federal Reserve System who have assembled really a remarkable group of speakers, moderators, panelists, and paper presenters. And so I thank all my colleagues for the work that went into preparing this event. By exploring the pathways to a level of financial and economic well-being, security, and opportunity that most associate with being middle class, the conference will provide us all with insights into possible ways to strengthen individual outcomes and in the process lift the economy and its economic potential. But my role and my great honor this morning is to introduce our first speaker. No one is better suited to expressing why the research presented at this conference matters to the Central Bank of the United States than its chair, Chair Jerome Powell. Chair Powell has a deep understanding of how the economy and financial markets operate that he's developed over the course of a distinguished career. Having served as a member of the FOMC, Federal Open Market Committee, since 2012, he's a seasoned monetary policymaker. Having spent a considerable amount of his career in investment banking and with private investment firms, he knows firsthand how financial markets operate. Having served in the U.S. Treasury Department in the early 1990s and for 7 years at the Fed, he understands well that financial regulation and supervision can provide a more secure foundation for the financial system and the economy. Over the time that I have had the privilege to work with Chair Powell, I have come to appreciate not only his remarkable intellect and his ability to communicate clearly and plainly, but also his high integrity, his fundamental decency, and his deep concern for the well-being of all Americans. He is truly animated by the opportunity that he has to help fulfill the Fed's dual mandate of price stability and maximum employment to keep the economy on an even keel as possible, to safeguard the stability of the financial system and ensure the fair treatment of businesses and consumers in transparent financial marketplaces. He's a person of the absolute highest moral character. He really serves as a light and a leader to everyone in the Federal Reserve System. He sets an example to which we all aspire. Yet, if you spend time with him, you'll know that he remains remarkably down to earth, maintains a terrific sense of humor, and great concern and love for his family. What a privilege it is to serve with him. It would be hard to imagine a more thoughtful person to lead our nation's central bank. Please join me in welcoming to the stage Chair Powell.
Thanks very much. It's my pleasure to join Mike and Eric in welcoming all of you to the Federal Reserve System's 11th Community Development Research Conference, co-sponsored by the Community Development Offices of all 12 Reserve Banks and the Board of Governors. These biennial conferences are one manifestation of the Federal Reserve System's deep commitment to supporting research that helps policymakers, community development practitioners, and researchers improve the economic well-being of families and communities. These gatherings also inform the system's work in promoting consumer protection and community development, and I want to thank all of you for your contributions to this conference. This year, the conference focuses on pathways to the middle class, and while there are many definitions of middle class, I think we can all agree that achieving a basic level of income security is fundamental. Surveys suggest that many Americans believe being middle class means having a secure job and the ability to save. In recent decades, income growth for middle-income households has lagged behind that for high-income households. In addition, economic resources differ markedly by race, education, occupation, geography, and other factors. Those circumstances underscore a twofold challenge for our country: fostering the conditions that will help lower-income families reach the middle class, while ensuring that middle-class status still provides the basic economic security that it has traditionally offered. The conference organizers have sorted through the many research questions that will be addressed today and tomorrow, and have taken away 3 key observations that are fundamental to addressing these challenges. The first observation is to note the long-term decline in relative income growth and upward economic mobility for those in the middle. According to a number of measures, income has grown more slowly for middle-class households since the 1970s than for those with higher incomes, resulting in wider income inequality. The kind of generational improvements in living standards that were long the hallmark of the American middle class have steadily diminished. In the 1950s, better than 80% of children born in middle-class households grew up to out-earn their parents, but more recently only around half do. One factor in this decline is the increase in income inequality. Another is slower productivity growth. This conference will touch on other possible reasons for this decline in upward mobility and relative income, such as changes in the prospects for career advancement that vary by occupation and by location. The second observation is the widening gap in economic status and prospects between those with a college degree and those without. In the 1960s, well over 90% of working-age men held a job, and there was very little difference in employment between those with and without a college degree. While the share of college-educated working-age men with a job has fallen from more than 95% in 1967 to around 90% in 2017, it has plunged for others. 95% of male high school graduates were working in 1967, but only about 80% of them were working in 2017. Among working-age men without a high school diploma, about 90% had a job in 1967 versus a bit more than 70% in 2017. For women of working age, the trends are less clear, but those without a college degree are also less likely to work today. Research presented this morning will discuss some possible explanations for the divergence in employment, income, and other economic prospects between college grads and others. The third observation is that the prospect of moving up the economic ladder depends on factors beyond effort and talent, including your family, the neighborhood you grow up in, and the quality of the primary and secondary schools you attend. Your chances for attending college are much better if you're raised in a higher income household, and that advantage has increased substantially since the 1980s. Another factor is geography. Some research indicates that economic prospects are better for those who grow up in neighborhoods with less income inequality, less concentrated poverty, and better performing schools. Finally, across so many dimensions, we continue to see disparities in economic outcomes by race and ethnicity. These are crucial issues for us and for our country. Sound public policies can support families and businesses and help more Americans reach and remain in the middle class. And I look forward to hearing about your discussions over the next 2 days, and thank you again for your contributions to this conference. Thanks very much.
Good morning. I'm Claudia Sam from the